Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Hypercharge Networks Corp. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome David Bibby, President and CEO, and Navraj Dosanjh, CFO of Hypercharge Networks Corp., which trades on the OTCQB venture market under the symbol HCNWF and on the NEO under the symbol HC. Welcome, David and Navraj.
Thanks, Matt. Delighted to be here today.
Thanks, Matt. It's great to be here.
Great. All right. Well, thank you everyone for your time today, and look forward to giving you an update and an overview of Hypercharge Networks. So we'll just get rolling here. So my name is David Bibby. I'm the CEO and co-founder of Hypercharge Networks. We provide turnkey EV charging solutions that help our customers grow their business and accelerate the adoption of the electric vehicle and the shift towards a carbon neutral economy. So we believe that this electrification transition is inevitable now. It's already in full swing. I'm going to talk a little bit about the macro here today, about Hypercharge, what differentiates us in the market, what markets we serve. And then I'll flip it over to our CFO, Nav, for some updates on milestones and progress to date. And then we'll open it up for Q&A from there. So massive EV adoption is happening everywhere. What you're looking at here is a chart that shows, generally speaking, in the past several years, what we've seen. You can see the hockey stick is starting here. And one thing I'll note right out of the gate, Hypercharge was founded in 2021, June of 2021. So we're still a fairly young company in this space. My background is in tech, and I spent the last 6 years in heavy equipment working at the world's largest Caterpillar dealer. And my role there was to help digitize the entire business, as well as to get all the assets around the world connected. So if you look at what's happening in aerospace and heavy equipment and automotive, there's a lot of emphasis on digitizing what's happening in the markets out there. And the whole idea is helping customers to achieve a better outcome, whether that's a lower cost of ownership or less friction in the market here. With EV specifically, what's happening is you're basically seeing a market that's growing at over 30% compound annual growth per year. I know everyone here is, obviously familiar with Tesla and all the work that, GM and Ford and Volkswagen and other groups are doing. And right now, I would say that, 2 years ago, the sentiment was very bullish on the market. If you look at the market today, there's some headwinds, I would say. What we're seeing here is we're starting this classic crossing the chasm technology adoption curve, where the early adopters have bought EVs, and now we're moving over into mass adoption. So despite what we hear in the market, quarter over quarter, every year, or every quarter, you're just seeing new records in these areas here. So it's going to happen. It is going to take some time here. One of the biggest challenges in EV adoption is a lack of reliable infrastructure. So charging infrastructure. And that's really why we started this company. I started as a consumer, as I mentioned, busy digitizing the Caterpillar world. I bought an EV in 2019. And one of the biggest issues I found was a lack of reliable charging infrastructure, and decided to do something about it. And that's what we're on a mission to do here right now, is provide simple, reliable charging to the masses. So this chart here is showing historical, what's happening or has happened in the market, and what's going to happen in the market around both public and private charging systems that are required. So it's a paradigm shift. If you don't already drive an electric vehicle, once you get into one, you realize that, it in many ways is the future. And then you realize that there are some hurdles here, and range anxiety is a real thing that people have. And that's where you're worried about whether you're going to have enough energy to get where you're going. You're also worried about, where do I charge these vehicles? So, and that's where we come in. That's the problem that we solve every day. So the global energy market is massive. This transition, as I mentioned, to a net zero economy is a multi-trillion-dollar opportunity here. Almost half of that is driven in transportation, specifically in EV sales. This is going forward by 2050. It shows how much investment is required for us to make the leap here. So it's a lot. As I mentioned, we can't come in, we look at EV adoption, we want to make it frictionless. We offer simple, reliable charging solutions at home, at work, or in public. So it's really important for people to know that, you don't go to the gas station anymore. Over 90% of your charging, or refueling, if you will, happens either at home or at work. So there's lots of media on chargers not working, long lineups for public charging, and that's totally true. It's probably one of the fastest growing segments of our business is in public charging, high powered public charging. But the bread and butter of our business is actually in multi-unit residential condos. What we do is we provide a simple charging solution in condo or workplace settings, think public parking, and we manage all of that on behalf of our customers here. And we make sure that it's reliable. Our whole team is focused on delivering a great customer experience, so that you don't rock up and have your charger not available. I'm not sure if I flipped to, I did. So a little more on that. So we have the residential chargers, we have commercial chargers, and we have fleet charging. So these range from the smallest home chargers, like the one I have in my garage here, that one in the top left there. That's our new Hypercharge Home. We just launched that in December. That's going to be a mass market product for us. It's a very smart charger, though. Don't be mistaken by it. It has a lot of features and capabilities that homeowners will like. It has an app. It has the ability to do demand response, meaning that it'll work with the utilities to help give them better visibility into what's happening in the grid, and actually control that in the future if required. It also, the part in the middle where we spend most of our R&D dollars, is on something called EVon. This is where we connect our systems with other systems. It's an integration play. We've first started that in the public parking world. So all of our, like a lot of people, when they pull up to public parkade, they have to use two apps. It's a pain. They don't want to pay for parking with one app and then pay for charging with another. We've reduced that friction through EVon and connected these two things together. We'll continue to do that in other areas, like fleet applications, like building management applications. So we believe, we have an amazing app. People love it. We actually win a lot of business because of it. But I think sometimes the best app is no app, and being able to integrate it, make it frictionless for the consumer is important to us. On the commercial side, what we've been focused on there are sort of, I'll call them higher end level 2 chargers. So level 2 chargers are chargers that will refuel your vehicle in several hours. Level 3 chargers recharge your vehicle in under an hour, more likely 30 minutes. We have some really innovative products in both those spaces. And the cost is obviously, the high-powered chargers need a lot more utility infrastructure, and the chargers themselves are a lot more expensive. But consumers love the convenience of being able to recharge their vehicles quickly. So we have everything from the smallest charger all the way up to the fastest chargers, and we manage it all. So that's really important for people to know, that we take care of everything there. So from a business model point of view, we're a capital light business. So we decided from day one that we weren't going to be the manufacturer of all these products. We're small, but also I think in many ways there's so many options out there in the hardware world that often what happens is it's impossible for one company, unless they have super deep pockets, to manufacture everything that the consumer needs. So what we decided to do from day one was go with an open standard product. Meaning, think of your cell phone. No one likes a locked in cell phone that sticks them to a carrier. Everybody wants an unlocked cell phone, and the carrier can compete on price and on service and reliability. That's what we do in this space here. So we've adopted a hardware agnostic approach with open standards that allows us to provide a huge breadth of products in the market to serve our customers. Our channels to market, we sell a lot directly to multi-unit developers, as well as directly to strategic partners like parking companies and others. But we've also built a robust partner channel. And so the partner channel allows us to use others to sell our product. And we've got over 50, mostly these are electrical contractors around North America. And ultimately, they're the ones that are going out and providing the service to the consumer. We'll co-sell with them. We also have a number of affiliates that have relationships with some of the larger customers that we work with, and we give them the ability to help introduce us to those customers. Just expands our sales force at a lower cost. So that's a very, very productive channel for us. And then, as I mentioned here, beyond EV charging specifically, we think of innovation as really, really important to us. I talked about EV already, but also we have launched 3 products in the last quarter. So we launched Hypercharge Home, we launched EV and we also launched a carbon credit program where available. So primarily in Canada here, there's a low carbon fuel standard that for public charging and multi-unit residential charging, we can manage the carbon credit programs on behalf of our customers, and we do a revenue share with them. Hugely successful program, early days for us. So those are 3 things that we've done to innovate most recently. Our business model, we have 3. There's a direct purchase model where the customer wants to own the charger and have us operate it. Most of our business today happens that way. It's fueled by a lot of the government grants, both in Canada and in the US. Many jurisdictions, both federally, state-wise, as well as provincial, are offering incentives to consumers to install EV chargers. And so we help our customers apply for those grants, win those grants, and then ultimately we win the business through that way. We're also increasingly offering a leasing program. So if people don't want to put out the capex to buy this equipment, we can finance it. And then third is our charging as a service. This is where we own and operate the equipment, and we earn money back through utilization. So that's a very interesting space that's growing for us as well. As I mentioned earlier, I just want to highlight the point. Every charger we sell today, outside of the home chargers, but all the commercial ones are networked and managed, and they have a recurring revenue component to them. So our business is not just about selling chargers, it's about providing a recurring revenue source for us as a company and investors. And then ultimately, the reason we do that is because we want to make sure that the chargers are managed and available for the consumer when they pull up. But also in the residential space, like you don't want to pay for your neighbor's charging. We handle all of that billing. As an example, we handle all the security to make sure that people aren't stealing power. We make sure it's online and available. And for that, we sell subscription services for those. So I'm going to flip it over to Nav now, Nav, our CFO, to walk through some of the milestones of the company here. Nav, over to you.
Thanks, David. These milestones here listed are as of September 30th, 2023. So we've seen some significant growth since then over the prior quarter. In calendar 2023, we had a 61% year-over-year growth in our top line revenue. That came from delivering over 1,600 ports. We recognize our hardware revenue once these ports deliver, and that's where those 1,650 ports delivered all time come from. That's an increase of 230% from 2022. Since the beginning of our start in June of 2021, the company has sold north of 2,800 chargers. We also surpassed 3,000 chargers sold, and this is a significant milestone for us. We'll reach that this quarter. In 2023 as well, we grew our backlog, which is double the recognized revenue that we have here. We grew our backlog to just over 1,100 ports. That includes recently a $2 to $3 million deal we signed with a Canadian energy provider, with the potential for follow-on orders as they ramp up their public fast chargers and electrify their operational fleet program. And couple $1 million in multi-unit residential building projects and others. To date, we have 271 sites under management. So all of these ports that we deliver are on our network, and there are several ports at each site, and we manage those through 205 customers. So what that really means is that we have a lot of repeat business from the customers that we have. Some of our customers are, as David mentioned earlier, large property management companies, governmental agencies, and multi-unit residential buildings and commercial properties as well. As of the end of the year, December 31, our opportunity pipeline is currently sitting at just under $50 million. And that's continuing to grow month over month. We're seeing a lot of that pipeline growing, and we're excited about that. In the year as well, we generated industry-leading gross margins of 33%. Now, this is a 9-point increase from 2022, where we had a 24% gross margin. So we're doing this through multiple revenue streams. As we mentioned, hardware, of course, is a big component, but we also have a services business where we do site design and planning and installation. Now, additionally to that, there's 4 recurring revenue streams that help with our gross margins, and that's software as a service. We have an extended warranty program. We have really reliable chargers. Our uptime is also allows us to really capitalize on this. We have charging revenues and carbon credits. We're really excited about the carbon credit program. We've had some significant uptake in our program since our rollout in Q4, so we're excited about that as well. Our preferred partners are a critical part of our business to help us to penetrate new markets, both in our existing verticals and in new verticals. We're right around 55 there, and that's continuing to grow as well as we enter into the new markets. And David, I'll flip it back to you for the next slide.
Oops, I think this one?
That's right.
Yeah. So essentially, our whole play right now, we started in Canada. We have offices in Toronto and Vancouver. We're headquartered in Vancouver, Canada. We're actually in 9 provinces, well, 8 provinces and 1 territory now, and we're expanding into the US. So our whole growth strategy was, win our home turf here. That's British Columbia. BC, just so you know, has over 25% of all new vehicles sold in the last year were zero emissions. So that's battery electric or hydrogen. It's leading in North America, right, toe to toe with California. So The other provinces are catching up. Alberta, surprisingly and interestingly, is also growing very quickly. That's our province to the right, and then Ontario is really starting to pick up steam as well. And Quebec is also like north of 20%. Our whole mission here, though, is to continue to expand in Canada. Maybe I'll just flip to the next slide because it'll talk about it, and then we'll. Well, it's a few slides down. I'll come back to it later. But so we're going to grow in Canada. We're going to expand into the US. That's our goal. And I see one of the questions in the Q&A that I'll come to here on how we do that. Continue to innovate our business model and grow from here. So to date, we've sold in 6 states. I'll say it's a pretty thin coverage at this point. We've just received conditional approval for the California certification required for us to sell public charging down there. We're growing in Texas, as well as in sort of the Eastern Seaboard, New York, New Jersey, Rhode Island, etc. So how we're doing that, there's part of what we're doing today is using our cross-border developer network. So we'll get spec'd into their buildings, and as they put new buildings in the ground, they'll put our chargers in too. So there's a lag. Nav was talking a little bit about a growing backlog, which is great for us. We'll sell deals today that will convert anywhere from next quarter to a year and a half, 2 years out. So what we want to see is that backlog continuing to grow, and then of course obviously convert to revenue as these buildings are finalized and their parkades are built. So then I'll just flip through. I know we only have a few minutes. These are just a few of the customers that we've worked with here. There's a good mix of parking companies, large developers. This is a subset. There's a few other verticals that we're going after and winning business in. Hotels is another key area for us also. Our team here, you've got myself and Nav. Someone asked a question about our sales force. Maybe I'll just touch on that one now. I think that was Andrew. Oh, sorry, I wasn't necessarily supposed to mention names, but hi, thanks for the question. The question is, can you discuss your revenue model and how you acquire clients? Do you have a direct sales force or rely on channel partners? It's both. So we do have a direct sales force, both inside and outside reps, and we also have the partner channel as well. So that's how we're going to market here. Our board of directors, we do have independent directors. We are traded on the OTC, as mentioned at the beginning here, as well as on the CBOE NEO under HC. On the OTC, it's HCNWF. Delighted to have our kind of robust board here. Lots of experience in capital markets, as well as a few serial entrepreneurs, or myself and another gentleman here, Trent, who've had some success in the space here, growing, exiting some large companies as well. So what else do we have? Yeah, I touched on this a bit here. So grow Canada, number one, that's our priority. We want to own our own home turf. Expand into the US, and the market is at least 20 times bigger than Canada here. So we want to do it smartly though, because we are a small company with a lean balance sheet. So we got to be smart about how we do that. Innovating technologically. So we talked about Evion. There's a few other components that we have in there around site owner dashboards. As Nav mentioned, carbon credits I mentioned as well. Lots of opportunity to innovate in this space. It's still so early. If you look at where battery technology fits into this, going to be increasingly important. We're working on a few different angles for that. And then finally, number 4 is around corporate development, corp dev, M&A. There's going to be and is an opportunity for us to grow through acquisition. That's part of the reason that we decided to go the public markets route, so that we could use our share capital to help us grow. There's a few components that we would like to add. So whether that's growing geographically through, another way to get into the US is to acquire or merge with a smaller or same size company as us. There's also some IP that we might want to acquire. So we're always looking for that. We've got a team of Corp dev people that are working with us right now on that. So I think that's pretty much the last slide. So I'll ask John, is it okay if I just wheel into the Q&A now? How about I just do it? Okay, so I already talked about the first question around our sales channel. Another question said, how competitive is the environment in Canada and the US? Do you have any IP protections? So how competitive? It is a competitive market, definitely, but the industry itself is growing at over 30% CAGR right now. So there's lots of room for growth. As far as IP protection goes, Evion is an area where we're differentiated in the market. We don't have an IP protection on it per se, but we certainly have an early lead in that space there. So the reality is, the market is massive, and what we're finding, I think Nav touched on this, or if not, we're winning a lot of repeat business now too. So once we're in with a developer or a customer, a lot of times they continue to grow with us and spec us in. So that's a way for us to grow. Another person asked, what are your growth drivers and milestones for 2024? So we won't necessarily give guidance on this one. It's a great question, but I will talk about our KPIs. The other thing I want everyone to know is how we operate. We use the OKR framework, and essentially what we have is we have a number of KPIs. So it's number of ports sold, ports delivered, and revenue. Obviously, the bottom line of all scorekeeping is revenue. So for us, getting the ports sold out there in the market are really, really critical to us. We're narrowly focused right now. Like, we have a lot of breadth, but our bread and butter is in multi-unit residential. So we have products that work in fleet and work in public, but we're increasingly going deeper in that space. So those sites under management, really important to know that over 200, we launched the product in April of 2022. We're now over 200 sites under management. Virtually every site under management represents expansion revenue, because what happens is people will put maybe 4 or 5 chargers in the ground in those locations. And then as drivers require them, those sites will expand. We'll add more chargers as the buildings need more. So that's a great question.
It's important to note on the sites under management, that's growing at 25% per quarter. We're seeing significant growth there with our repeat customers, and that's a nice trend that we're expecting to see continue to grow.
Yeah, I'm going to keep going here. Can we tap into funding from the Infrastructure Investment Act? The answer is yes. There's a program called NEVI in the US. It's a subset of that act that we're working on. Also, there's a number of state funding programs. So we have experts on our staff that know about those and will help our customers apply for those. So that is definitely a key driver for us. Next question was, is there or will there be a standard interoperable solution in the US, North America, et cetera? Well, the answer is yes. It's going to take a little time. There's a Tesla open source there, what's called the NACS, North American Charging Standard, that most of the suppliers are now moving towards. First of all, our level 2 chargers work with Teslas and others all day long. I have a Tesla. I use our chargers. No problem. Where this comes into play is in the fast charging world. Our chargers are all upgradable to the NACS standard. And I think over the next 3 years, you're going to see that everybody move towards that standard. It's a much cleaner solution than the original one that was out there. Let's see if there are any other questions. I think that was it for questions. So with that, if there are other questions, I'm happy to take them. And there aren't, but I'm happy to also meet with anyone who's interested. Nav and I can make ourselves available for a follow-on call. Number one, like just to summarize here, the EV adoption is really inevitable for most people. They may not be driving an EV today, but either your next vehicle, probably your next one, will be, or you'll have one if you have two cars. So, and they all need somewhere to charge, and that's what we provide. Is you hear so much press about the lack of reliable charging solutions. That's what we solve every day, and we continue to win more business because of that. We're open standard, so we can take advantage of any emerging trends that come along. We have amazing software that allows us to manage these things in a reliable way and provide a recurring revenue model for us as well. So, and we have a great leadership team that's really focused on sort of our core metrics, which is growing our business. And finally, like given the market that we're in, it's obviously small micro cap companies are beaten down. This sector more than most. It's we're trading at very comparable to our peers, but it's down a lot, and but it isn't going anywhere. If you just look at crossing the chasm, this is a really interesting time for this market here, and I think we're heading into this trough of disillusionment here a little bit, where a lot of the OEMs have invested billions of dollars and haven't necessarily made the leap. But if you just look at what Tesla's done and is continuing to do, they're continuing to grow, and all of this, we're like we're the infrastructure provider to that industry there. So it will happen, and then I guess finally, like we spend a lot of time and energy controlling what we can. So I don't try not to worry too much about what the macro market is doing. More focused on running a tight ship here in terms of our G&A, investing in the right things that will provide growth for the company, and then looking for investors and support from the market to help us grow. I think that's it for me. I don't see any other questions, John. So I guess we'll wrap